Good morning and welcome to the trade setup right here on Bloomberg Quinn Live. Remember, it's a big central banking day. The Bank of Japan is widely expected to keep monetary stimulus unchanged. Maybe the decision has come in, but this is something that we'll be watching out for. And that is just hours before the European Central Bank, which is expected to raise the interest rates for the first time since 2011. So that's the big thing that is in the minds of people. But in terms of other global news flow, Joe Biden expects to speak with Xi Jinping within the next 10 days. Oil slipped marginally on lackluster US summer gasoline demand. Tesla, after its results, has said that they've sold majority of the Bitcoin after the turbulent crypto foray, as a result of which Bitcoin, which topped $24,000 briefly, lost a little bit of sheen after that disclosure. Asia Pacific markets are trading mixed, and as I said, the Bank of Japan decision is the key monitorable, at least for that market, if not some of the others. I doubt there's too much of change expected thereof, though. On the US side too, which closed last night, I mean, Nasdaq did okay. It kind of pulled the Dow and the S&P in the green as well, but it was essentially the Nasdaq which had a rally. The Dow and the S&P were okay. The other risk assets, well, Bitcoin in particular, did okay and gained a little bit in trade. But like I said, after that 24,000 mark dipped a little bit. The 10-year yield at $3 index gained marginally, you would have to say, and therefore a bit of an uptick out there on the dollar index, at least in the session. The SGX Nifty should come up on your screen next. We've had a bit of a decent up move the last few days, you have to admit, and we're building on a little bit from there. 16,522, about 24 odd points. The reason why this looks very similar to yesterday's opening is because while we open very, very strong and trade for better part of the day strong, it came up maybe a little bit towards the second half, and therefore we'll start off at about that 200-day EMA level, 200 DMA level, even in today's session. So what's the trade setup? I think the risk on mood largely continues. I somehow get a feeling that the risk reward is not the best for large leverage longs. You could do specific bottom up longs, otherwise large leverage longs, maybe the risk reward is starting to turn a bit adverse compared to the previous few days, and not from a levels perspective, just from a build up perspective as well. I think the immediate hurdle for the bank Nifty is at about the 36,300, 36,500 zone, which coincides with Bank Nifty's 200-day moving average. So both of these are kind of right there at the 200-day moving averages. Let's see if they breach that. If they do, then of course technical parameters take these indices higher any which ways in the current series. Asia Tech might have a good start again today, but remember the last couple of days Tech has been leading the up move, and it may take a breather post today based on what couple of chartists are saying, and consumer durables are likely to witness some pressure in the session today. We'll talk about a bunch of results in just moments from now. Let me just very, very quickly tell you, of course, FI is net bought, so that is a good sign. And today, a bunch of companies come out with results. So while we'll have result reactions coming in as well, and while we don't have too many index names today, because the index names largely come tomorrow and day after, but a bunch of very important mid-cap names, right? Happiest Minds, it'll be interesting to see if they can continue the digital juggernaut. It'll be interesting to see if ICICI Securities, which had a lackluster quarter the last time, has an even deeper gash this time around or no. Emphasis, and there's a Bloomberg story which says that the options data indicates that there could be volatility in Emphasis post earnings, so that will be important. PVR, and we'll be talking to the management today, by the way, on PVR. So that'll be an important conversation. I think at about 2:30, 2:45. So you might want to tune in for that as well. And SRF is an important chemical name coming out with numbers, like actually one of the first ones in the spec chem space to come out with numbers. Remember, viewers, in the case of SRF, it may not matter as much as to what the company does as opposed to what the con call suggests. So remember, in SRF, a large portion of the move happens post the con call because they give a lot of information about how the near term is looking like. So keep that at the back of your mind. Lots of stocks, unfortunately, a lot of weak result-based stocks, but let me highlight all of those for you. So Wipro is the first stock of the morning. The consolidated numbers, revenues up 3.2%. So the revenue numbers were largely in line, maybe marginally better, but the EBIT fell at about 3,085 crores. The estimates were 3,490 crores. So 9% drop in EBIT, whereas the expectation was that the EBIT will actually move up a little bit. EBIT margin consequently lower. The expectations were 16.24. The EBIT margin is coming at about 14.33. The net profit fell about 17% at 2,563. The estimates were about 3,058. So the revenue was okay, but the margin pressure is clearly showing. And we know what's happened to companies which have shown margin pressure, right? TCS is a case in point. HCL Tech was a case in point, and the result reactions weren't the best. And remember, Tech has put in a bit of an up move behind it. So it'll be interesting to see how Wipro reacts. So look at the calls, right? Nomura has a neutral. They've cut the target price. They're saying that the margins miss, but the growth outlook remains good. The margin recovery is likely to be gradual. Deal wins provide comfort on the growth outlook. That's the thing about Wipro. The quarter was bad. The outlook is not too bad. That's the conundrum thereof. And Nomura has cut the FY23-24 EPS by 7 to 10%. Well, that's the extent. Goldman Sachs is not so benign on Wipro. They are giving out an outright sell with a target price of 374. Q1, according to them, is below on the wide margin miss. They put in the sell as they believe that the street is yet to bake in the lower margins, and they believe that they have largely maintained the weak revenue growth outlook over FY22 to 25 and EBIT margin forecasts of close to 16%, and they are not breaking it higher. They reduced the FY23-26 EPS estimates by 3 to 5%. Difficult call to make about what's the extent of the cut there, but you would largely believe that Wipro could have a slightly soft start today. Gland Pharma, there's a query on how Gland Pharma's numbers aren't the best, unfortunately. Revenues are down 26% at 857 crores. The estimates were 1129. EBITDA down 38% to 270 crores. The estimates were 368. EBITDA margins at 31.5 versus 32.6. The reason why EBITDA margins don't look so bad is because both the revenue had a big crack too, and therefore on that base the margin may not seem as much of a miss, but both revenue and EBITDA have been misses, as a result of which the bottom line too are down 35% at 229 crores. The estimates were much lower there, so therefore that's the problem for this one. Now Jeffries has a note on Gland Pharma. They have a buy rating, but they've cut the target price to 2916 from 3876. They have cut the FY23-24 EPS by 13 to 15%. So the buy call notwithstanding, I reckon that Gland Pharma could have some pain today. Ceat is the other one, which margin miss. Revenues up decent, like 48%, so not bad. The Bloomberg estimates se bhi upar hua, better than the Bloomberg estimates as well. But the EBITDA margin 5.8%, the expectations were 6.2. Net profit at 9.25. Expectations were 111.6 crore. The only good part about Ceat is that their management has said that they've seen some correction in the commodity prices recently, and if the trend continues, it'll be positive for margins. I mean, needless to say, we know that, but the fact that they cited that there has been a positivity out there, who knows? But largely the numbers are below estimates. It was not expected to be a good quarter any which ways. The expectations are 6.2 versus 8.7. The EBITDA margin is coming at 5.8, but just look at the gash. 8.7 the corresponding quarter and 5.8. That's a big gash, nearly 290 basis points drop in EBITDA margin. So not a good quarter. Havells, not a good quarter, unfortunately. Revenues up 63% and a low base, a hot summer were all expected to bring in these revenue jumps. So that's not a surprise. The problem is the EBITDA margins at 8.5%. The EBITDA margins for Havells are the lowest in a decade. Net profit just up a mere 3%. Imagine on a 63% jump in revenue, the net profit move is only 3%. So not the best. It'll be interesting to hear from Mr. Anil Rai Gupta about what the outlook could be like. Could quarter two turn out to be slightly different, as Sudeep Bhattacharya was saying that it would be? Remember, the jury's out there about whether India can recapture some of the loss seen because of the falling commodity prices in quarter two, or lower demand will hit the margins even in quarter two. I think it'll be great to get the commentary from Mr. Anil Rai Gupta around that. Agrotech Foods was the other one, not the best of quarters. Revenue fell, EBITDA margin at 3.3 versus 7.8. Net profit fell 97%. at 22 lakh versus 7.5 crores. So not a good number. Now, lest you think that I'm only bringing out negative numbers, there are a few which did okay. IndusInd Bank, net interest income at 4125 versus 3564. GNPAs, we measure them quarter on quarter usually. Marginal increase, their net profit 1631 crores. The expectations were 1400, so they did much better on that front. And there's a lower than anticipated credit cost, which resulted in the robust earnings growth for IndusInd Bank. I mean, I don't think you found too much of a problem with these numbers. Morgan Stanley is overweight there with the target price of 1300. They say that the key positive was the strong core PPOP and steady margins despite higher rates. The negative was the higher than expected slippages from the restructured loans, but they see the slippages and the credit cost moderating, which will drive about a 14 to 15% ROE in FY23. Jeffries is a buy with a target price of 1250. So arguably, IndusInd Bank kind of stands out. Tatacom, revenues were up just 1%, not too much, but better than Bloomberg estimates. So 4310 crores, the expectations of 4286. EBITDA margin at 25%, marginally higher. Net profit 49%, much higher than estimates. Maybe Tatacom has a good day. Maybe AU Small Finance Bank has a good day. NI up 35%, GNPA is moderated a little bit. Net profit up 32%. You couldn't find too many falls here. Again, brokerages largely benign. Morgan Stanley has an overweight on that one as well. They missed estimates the PAT marginally, but not a bad quarter per se. So these were largely the numbers. There was weak quarter from Hathway Cable and JSW Ispat too, I thought. So maybe those two might have a negative reaction. Not very liquid stocks. Maybe Hathway is JSW Ispat, maybe not. Watch out for those. Watch out for some of the others. Sugar stocks, for example, there's a note that India may allow sugar mills to export more to prevent defaults, or Adore media reports that is. Adore Welding, which has won a 145 crore order from ONGC Uran plant, or Indostar Capital, where is the group chief financial officer Kapish Jain has resigned effective from July 19th. So that could be in focus. Sonata Software, the companies will consider a proposal for issue of bonus shares. We haven't given it here, but Sonata Software is the other one which might have a bit of a reaction because of the bonus. I mean, people like bonus issues and stock splits. So maybe Sonata Software might react. And by the way, I haven't mentioned Hindalco. I thought Alcoa numbers from the looks of it sounded, looked okay. Maybe Hindalco has a slightly positive day. If it does, you know why. So Hindalco, in case it reacts, it'll be in the back of Alcoa numbers, which were pretty strong. So pretty good. So maybe Hindalco has a good day. So that would be the reason why it does. By the way, for all you technical levels and chart aficionados, we have the Twitter Spaces today focused a bit on technicals. Dr. C.K. Narayan and Rajat Bose, two veterans. I've spoken to them a number of times over the years in my journalism career. They are probably as good as they come with charts. And we'll do a Twitter Spaces today at about 8 p.m. So you might want to tune in with your queries around charts and levels. So that might be an interesting thing. It's a bit of a deviation. We've done a lot of fundamental based Twitter Spaces all through. Today we'll focus a bit on the charts. So you might want to tune in for that. So net viewers, the day might start off well. Can it continue? Don't know. Maybe IT comes under a little bit of pressure. If not in the first half, then in the second half. A bunch of result disappointments today, and you might probably see result reactions on all of those, but a bunch of non-nifty names coming out with numbers as well, and important ones at that. So you might want to check, keep an eye out for all of those too. But the open today will largely be marked by reactions of companies which will react to their results more on the negative side than on the positive side. The banks and NBFCs are probably the ones wherein the results seem a bit better, and therefore that's maybe the chain of reaction that you might want to see on the positive side. But otherwise, largely maybe a soft start. The small positive that I thought was that crude has not really continued to move higher and has slipped a little bit. From an India perspective, that is largely a positive move. Thanks so much for tuning into the space to the trade setup today. Don't forget to log in for the Twitter Spaces and a bunch of result conversations that we have during the day. Stay safe.